Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to address such a distinguished audience. If you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491 432 6556. Or you can also scan the QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe this channel name, Areca Capital channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email hồng.nguyễn@vcfc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about BVH. BVH is a diversified financial group founded in 1965 as a wholly state-owned company in the general insurance industry. It began selling life insurance in 1996 and subsequently opened other subsidiaries and associates in brokerage, banking, and fund management. As you can see, it is the report which was collected by Viet Capital Securities about BVH on the 16th December 2022, with the current price is 49,600 Vietnam dong. Target price 57,200 Vietnam dong. Last target price 62,600 Vietnam dong. Premium growth to slow, financial income to improve. We lowered our target price by 8.6% to 57,200 Vietnam dong per share, but maintain our outperform rating for BVH. Our lower ticket price is due to 21.8%, 25% decrease in our projections for 2022-2023 forwards net profits after tax, and 2, cutting our target PB from 2 times to 1.9 times, which outweigh the positive impact of rolling our target price horizon forward to end 2023 forward. We decreased our 2022 forward net income forecast by 21.8% due to 2.6% lower the net financial income, and 5.6% increase in underwriting losses. The latter is due to a 4% decrease in our 2022 forward direct premium forecast that outweighs our 9.6% cut in underwriting and G&A expenses. We expect the recent interest rate hikes in September to October 2022 will generate a positive impact on BVH's financial income in 2023 forwards. Upside rate 1, lower than expected combined ratio. 2, higher premium growth. Downside rate, stiff competitions in life and or non-life that could negatively affect BVH growth. Premium growth to slow in 2023 forwards. Economic challenges in 2023 forwards could lead to a slowdown in production and manufacturing activities, as well as tightening personal spending, which could generate a negative impact on demand for insurance products in our view. However, we believe 1, the heightened risks awareness of people after COVID-19, and 2, increasing interest rate environment could still support demand for life insurance, especially for products with embedded savings benefits. We forecast life and non-life premium growth of 7.8%, 7.7% in 2023 forwards, compares to 11.2%, 10.2% in 2022 forwards, respectively. Technical discount rates for life insurers to continue to trend favorably favorably in 2023. We estimate that the technical discount rate has increased since late Q3 2022. We expect the increase in government bond yields in 2022 will continue to support a higher technical discount rate in 2023 and therefore supports lower level of math reserve expenses at BVH. Combined ratio to increase 1.7 ppts in 2023 year-over-year, which will be driven by the loss ratio. BVH stated that COVID-19 and dengue fever continued to a strong surge in claim expenses in 9 months 2022. Delayed medical treatments caused by nationwide social distancing measures last year and prolonged post-COVID symptoms have led to an increase in people suffering from chronic illnesses. We also expect some pressure on claim expenses in Q4 2022 due to Typhoon Noru, which occurred in late September, and claims for healthcare expenses to remain high. We forecast the 2023 forward loss ratio in the non-life sector to increase 2.8 ppts year-over-year to 50.2%, which is approaching the average pre-COVID level due to one, the increase of non-life insurance premium growth in 2022, and two, upward pressure on claim costs, especially for motor vehicle and property insurance caused by inflation and supply chain disruptions. 9 months 2022 recount surge in claims damage earnings. Direct premium overall non-life premium was in line with our expectation, while life premium tracked slightly behind our expectation. Net written premium 9 months 2022 net written premium was 29.4 trillion Vietnam dong, 12.7 year-over-year, completing 71% of our full-year forecast, applying a retention ratio of 92.2% compares to 89.7% in 2021, of which max expense 9 months 2022 max reserve expense was behind our previous forecast and decreased 8.4% year-over-year due to the higher primary 10 years government bond yield and weaker than expected life premium. G&A expand over net written premium was 10.8% in 9 months 2022 compared to 12.2% in 9 months 2021. Net financial income. BVH reported that flat year-over-year 9 months 2022 net financial income as one, a 10% year-over-year increase in financial income outweighed two, an 81.8% year-over-year surge in financial expenses. The former was mainly driven by one, a 9.4% year-over-year increase in interest from term deposits, and two, 23.5% year-over-year increase in interest from bonds and T-bills amidst the rising rate environment. Meanwhile, the spike in provision expenses was driven by 133.5% year-over-year surge in repo and loan interest expenses, and two, 268 billion Vietnam dong of provision expenses for trading securities resulting from the unfavorable stock markets in 9 months 2022 and 72 billion Vietnam dong of provision reversals for trading securities in 9 months 2021. Combined ratio in 9 months 2022, BVH loss ratio was 47.8%, more than 10.1 ppts year-over-year, while its expense ratio was 55.3%, less than 10.8 ppts year-over-year. The increase in the loss ratio was higher than our expectation. According to the company, claims for healthcare products jumped in 9 months 2022 due to post-COVID symptoms and dengue fever. The improvement in the expense ratio was driven by an 11.1% year-over-year decrease in non-life insurance expenses, while there was 12.8% year-over-year growth in 9 months 2022 non-life premium. Direct premium. We cut our forecast for direct premium by 3.1% compared to our previous forecast, which is driven by our 4% cut in life premium, of which life. We believe this item will be driven more by renewal premium growth, was BVH is currently launching competitors in diversifying its product and distribution channel. In addition, BVH set a low target during a recent analyst meeting for 2022 for new business premium growth at 5% year-over-year. According to the Insurance Association of Vietnam, 9 months 2022 system-wide new business premium growth was weak at 6.4% year-over-year. Net written premium, we assume a 2022 forward retention ratio of 91%. Claims and losses. Our forecast for claim expenses roughly remains despite a 4% cut in the life premium as one. A 16% increase in our forecast for claim expenses, excluding mass reserve expenses, is offset by 11.6% decrease in mass reserve expenses. We forecast the 2022 forward loss ratio of the non-life business at 47.4%, representing an 11 ppt year-over-year increase from low base in 2021. Underwriting expense. We decreased our forecast for 2022 forward underwriting expenses by 8.6%, following our 4% cut in life premium. We assume 2022 forwards expense ratio at 55%, less than 10.6 ppts year-over-year, compared to 9 months 2022 expense ratio of 55.3%. Net financial income. We cut our 2022 forward financial income forecast by 2.6%, mainly due to an 8.3% increase in financial expenses follow our expectation for higher provision expenses following the drop in the stock market over the last few months. Combined ratio. Given higher than expected claims in 9 months 2022, we forecast the combined ratio will be relatively flat year-over-year instead of an 0.8 ppt year-over-year improvement in our previous forecast. As one, a 10.6 ppt year-over-year decrease in the expense ratio awaits. Two, an 11 ppt year-over-year increase in the loss ratio. Now we move to the 2023 forward outlook. Higher interest rate environments to boost financial income. With the figure 3, BCSC's 2023 forward forecast. Direct premium, we forecast a slowdown in premium growth for both the life and non-life sectors due to weakening demand for insurance caused by one, the negative impacts of global economic slowdown, and two, tightening personal spending. However, we believe that one, the heightened risks awareness of people after COVID-19, and two, the increasing interest rate environment can still support demand for insurance, especially for products with embedded saving benefits. Claims and losses. We forecast the 2023 forward loss ratio of the non-life sector to increase 2.8 ppts year-over-year to 50.2%, which is approaching the average pre-COVID level due to one, the increase in non-life insurance premium growth in 2022, and two, upward pressure on claim costs, especially for motor vehicle and property insurance. For life insurance, we believe that tightening personal spending can trigger higher surrenders cases and higher claims for chronic units illness resulting from delayed medical treatments and health checks during COVID-19 that could continue in 2023, of which maps expand. Our projections for 2022 mathematical reserve expenses is 22.3 trillion Vietnam dong, applying 6.8% year-over-year growth. However, on a percentage of life premium basis, we forecast a 0.5 ppt decline in the ratio of mathematical reserves over life premium as we expect one. The increase in government's bond yields in 2022 will continue to generate a positive impact on the technical discount rates in 2023, and two, a slowdown in new business premium growth in 2023. Net financial income. We expect the recent interest rate hikes in September to October 2022 will generate a positive impact on BVH financial income as government bonds and term deposits accounted for 28% and 59% of BVH investment portfolio as of Q3 2022 respectively. While we expect higher interest expenses for repo contracts and debts, the pressure on provisioning for impairments and equity investment should be relieved per our expectation for the stock markets to recover in 2023. Figure 4, estimated technical discount rate of life insurers. We expect the technical discount rate of life insurers will continue to trend favorably in 2023. From 2022 onward, the discount rate for the reserve calculation is based on 100% of maximum 80% of the average interest rate of government bonds with a term of more than 10 years that were issued within 24 months before the reserve is set aside. Meanwhile, the primary government bond yield has dropped significantly since late 2019. We estimate that the technical discount rate has increased since late Q3 2022 and expect the increase in government bond yields in 2022 will continue to export a higher technical discount rates in 2023, thus supporting a lower level of mass reserve expenses at BBH. And now let's continue the to some figure. Let's take a look on the screen. I will share with you the figure 5, life and non-life GWP. And we have 16 figure above. You can see the valuation will lower our target price due to 21.8%, 25% decreases in our projections for 2022, 2023 forwards net profits after tax, and 2, cutting our targets PB from 2 times to 1.9 times, which outweigh the positive impact of rolling our target price horizon forward to end 2023 forwards. We continue to use a PB approach to derive our target price for BBH for 2023 forwards. We lower our targets PB for BBH from 2 times to 1.9 times, which is the same with the 2 years average 1 year forwards PB of BBH. We believe that low government bond yields created pressure on BBH mass reserve expenses in the last 2 years and that the burden should be eased moving forwards. However, our targets PB reflects our concerns regarding a delay in the schedule for BBH to launch unit-linked products. Growth in unit-linked products has been high in recent years, as new unit-linked insurance policies accounted for 22.6% of total new life insurance policies in 9 months 2022, more than 91.8% year-on-year. Currently, we do not have a refresh timeline on when BBH will be launching such products. Compared to our chosen peers, BBH is currently trading at a PB premium despite a relatively low ROE, which implies a relatively expensive valuation for BBH stock. However, we believe that BBH's ROE is substantial due to strict regulations regarding the insurance reserve calculation in Vietnam. Specifically, a more conservative discount rate used for the insurance reserve calculation in Vietnam has put upward pressure on BBH reserve expenses, thereby lowering its earnings capability and ROE. Below are the differences in discount rates used in different countries. China regulates a discount rate for the insurance reserve calculation based on a 750-day moving average yield curve of treasury bills issued by the country's Ministry of Finance, plus a premium of not more than 120 basis points risk-free rate with a premium. Malaysia regulates a discount rate for the insurance reserve calculations based on a zero carbon spot yield of Malaysian government securities. With matching duration, Vietnam regulates a discount rate for its reserve calculation based on 80% of the maximum 80% of average interest rate of government bonds with a term of more than 10 years that were issued 24 months before the reserve is set aside, and 20% of the maximum 70% of the average interest rate of government bonds with a term of more than 10 years that were issued 6 months before the reserve is set aside only applies for 2021. From 2022 onward, the discount rate for the reserve calculation is based on 100% of a maximum 80% of the average interest rate of government bonds with the terms of more than 10 years that were issued within 24% before the reserve is set aside. If a more favorable discount rate is allowed, the gap between BVH ROE and our chosen peers would narrow. While the 2021 penetration ratios for both life and non-life insurance in Vietnam approach the medium levels for our sample of emerging economies shown in figures 20 and 21, we believe that Vietnam's insurance industry outlook remains attractive as the country has a stable political and economic environment. Aging population and projected growth in GDP per capita that could support future demand for insurance products. Historical recommendations. Financial statements. Yeah, and that brings me to the end of my presentation about Viet Holdings, BVH. Hope this video and some information given to you will be useful for you. And if you want to open a legal trading account, don't hesitate to contact with us with the email on the screen so that we can support you. So thank you for your listening and see you next time.